Hi everyone, hope you're all doing well, and today I'm going to talk about the 4 stocks that I bought this week, and I'll try to break down like some of the reasons why I bought these companies, where I see the companies going in the next kind of few years, because I'm investing in these for like a 2 to 5 year view. And yeah, I'll break down why I bought them, and if you could smash the like button, that'd be absolutely amazing, and if you could subscribe if you're new around here, that always helps the channel out, and I'll take a look. Now, if you do want to keep up to date when I'm buying and selling stocks, then make sure you join my patrons group. Link is in the description. I always post on there when I'm buying and selling stocks, and I sold 2 stocks this week. But we'll go through the 4 companies that I did buy. So number 1 is Beyond Meat, and I have been buying this company quite heavy. I got about to 75% of the position that I do want to get in this company. The only little problem now is that it keeps going up, and I'm like, please go down. I want you to go down so I can buy more of you, which is kind of a little bit frustrating. So it has got to the point now where I've looked at Beyond Meats, and I think it's just got above about 140-ish, and now it's up above $140. I'm like, I'm not going to buy this one anymore. So I am waiting for a pullback in this one to carry on buying it more. So hopefully the market does pull back. Something like a 5% would be really good. And then I can carry on buying a bit more Beyond Meats, because this Beyond Meat could have been a massive position in my portfolio. It had the potential to become a top 3 position, which is kind of frustrating. I did build a nice position out, but I still wanted to buy it about 25% more than what I currently did have. And you guys know my bull case on Beyond Meats. I've got a full video dedicated to them. But overall, I think it's a massive growing industry, and it just had a horrible quarter, which gave us a great opportunity as long-term investors to pick this stock up at very dirt cheap prices. And like I say, with this company, when you think about the expansion plans it has in place and the corporate deals it has in place, this company will be doing in a few years' time billions of pounds in revenue. And like I say, to get it on a big massive drop that it did have was like an early Christmas present, and that's why I was buying so much. I think it's a fantastic company. I've actually tried the products now, which was fantastic. And you guys kind of know that story about the burger as well, and I didn't have it in the best cooking method that I could have had it. And yeah, I think Beyond Meats is one that unfortunately has gone a little too high now, but I've managed to just pick some more shares up on Monday into this company, and like I say, hopefully it does have a little bit of a pullback now, but I do see this company doing 2x in the next 2 years, and then in the 5-year kind of period, I do see this company going up probably 2x or 3x from here. So I do believe this is one of the companies that will give me a big return in the next few years. So number 2 was TTCF, better known as Tattoo Chef. Now, I'm not going to spend too much time talking on this one, because I'm actually going to do a full video on them tomorrow. So I'm not going to spend too much time, because like I say, I don't want to kind of bore you for tomorrow's video, but there was an interview just done with the CEO, which is Sam Gellett, I hope that's how you say it. And yeah, there was some really, really valid information in there. In fact, by the time that I've recorded this video, that's currently on the Friday, and because of that interview, I might actually go buy some more shares after this video has been made, edited and uploaded. But yeah, I have potential to buy even more of this. It is a great company, I feel, on a very cheap valuation with massive growth. And I know these two kind of clash with each other, but I guess they're kind of different with the way they're going down. Kind of a bit more ready meals compared to, a bit more corporate deals. But I think both have massive, massive amounts of growth. And like I said, the interview that I did see from the CEO and founder the other day with Roth Capital made me even more bullish on this company. So this one is definitely a massive buy, and I don't want to talk too much more about this one, because I'm going to save it for tomorrow's video. It's been a few weeks since I've actually last talked about this company, which was Dropbox, and I actually bought some more shares into this company. And for me, when I'm looking into Dropbox now, I think the cloud platform is absolutely amazing. It always had a lot of grief with like Google being in this area, but for me, this is the best platform in this area, and it's always done really well. People have always said that the likes of Google are coming for this company. You look at how this company's done over the last few years, it's still stuck in there with double-digit growth revenue side. This company is also going to be a massive profit beast in the next few years. And right now, this company's trading at a forward P of about 19. And you look at this company and the growth it has. A growth company, a double-digit revenue growth company, trading at a forward P of 19. That's a US company, not a Chinese company, a US company. And it's a bit like, this is really cheap. This company is going to pull out some massive profit growth. It's going to pull some amazing revenue growth. It's just bought the platform, HelloSign, which is going to help it absolutely huge. And I'm looking at the valuation. I'm like, this company when it IPO'd was like $40, and since it IPO'd, which I believe is like nearly 2 years now, since it IPO'd, this company's just gone down and stayed pretty flat from its IPO price of $40. And I'm looking, I'm thinking, well, surely this company should be somewhere at least a $40 range. And it should be. The Dropbox, when you look at the revenue growth and the valuation and what it got valued at in IPO prices, Dropbox is a $40 stock at $19. And I've been thinking all week, this company is so cheap, and I might buy a lot more of this company now because I'm looking at how the whole market carries on going, and this is just staying there. And I don't know if it's just the pressure of the short sellers or Wall Street just hasn't woken up yet and realised how good this company is, but this company at 19 PE is insane, and it is a company that should be a $40 stock. And if it stays at this sort of prices and the revenue and profit just keeps going up and that forward PE, keeps dropping, we're going to start talking about Dropbox that should be a $50 stock, a $60 stock. So this company alone is massively undervalued, and this company should be right now a $40 stock. So it's already got potential to go up 2x. And then when we start looking 2 years down the line, 2 to 5 years down the line, this company has potential to be a $60 stock. So for me, Dropbox, easy 100% to 200% upside in this one for me. Big fan of this company, and it's one that I probably will be buying a lot more of, looking at some of the valuations that are out there right now. And number 4 was my big Chinese company at the moment that I've been buying, which is Huya. Not featured it for a while, but yeah, I've actually started buying a little bit more Huya right now. The thing with this company is that I believe that at the moment it's going nowhere until we get the merger. Now the merger is probably about 2 to 3 months off. So I think when we get the merger, the reality of having Huya and Douyu under the same name will start. I think Wall Street will realise the potential. When that merger is done, Huya and Douyu together are going to destroy the streaming service in China. They are absolutely going to destroy it, and they are going to be massive. Their growth that they'll put in, the dominance they'll have in that area, combined with the new gaming age that we're entering, this company at these valuations is a bit like this one. I mean, Huya should be a lot higher value than what it is right now. Very much, I think Dropbox and Huya have the same sort of kind of growth plan, really. This company should be 2x where it is right now. And then you add in the growth over the next 5 years, and this company, I think both have 100% undervalued, so you get that gain. And then you think about the growth side of it, these companies for me are both companies that you'll get, I feel I will get 100 to 200% return on in the next 2 to 5 years, which is a great return. And these two very similar, beaten down companies that people don't realise how great they are, and when Wall Street wakes up, they'll start shooting up. And very much for this one, you can see the clear path. As soon as that merger is done in 2 to 3 months, people will realise, wow, this company is a beast. It's going to dominate the streaming industry, which is going to just carry on growing right now because of the new game cycle we have. And yeah, Huya was another one that I picked up, and once again I might be buying a few more of these shares over the next kind of few weeks, because I don't know how long it's going to be down here after that merger's done, because it's insane. That merger just gives it total control in the industry it's in, so absolutely amazing. So those are the 4 stocks that I did buy this week, guys. I hope you enjoyed it. As always, if you can smash the like button, subscribe if you're new around here, comment down below, let me know what you've been buying this week. I'm always interested to hear some new companies, and I'll see you in the next video.